So first come to receipts side. Problem number 15, page number 59. So receipt side, cash in hand, cash at bank, both the cash balance and bank balance are there. They will go to balance sheet directly. Now subscriptions. So subscription 2016, that is no part in current year. 2017, 83,000 that we have to take, and 2018, that is received in advance for next year. Okay, so that also doesn't come in our income and expenditure statement. Then sale of investment 90,000. Okay, so sale of investment, no doubt it is an income, but it's an asset also. So in asset side we have to reduce the value. Okay, and sale of furniture. So sale of furniture, here net effect we have to take. So first take subscriptions. By subscriptions, okay, so 83,000 in inner column. Let us check any adjustments are there. Okay, so here in adjustment they have given subscription for 2017 still owing where rupees 7,000. Still owing means, is it outstanding or to be paid? Still owing means to be paid, outstanding. We have not received yet. Okay, so we have not received yet means it's outstanding. So we have to add it to the, here, add outstanding subscriptions 7,000. Okay, and no more adjustments on subscriptions, only one adjustment. Okay, so total 90,000. Total 90,000. Next, come to sale of investment. So sale of investment in receipt and payment amount they have given 90,000. Okay, so in the adjustment what they have given, as per the balance sheet, the book value of investments sold was 80,000. Okay, so whatever book value was there, which they sold in the market, the value of that much investment is 80,000, and that they have sold for 90,000. Okay, so that means here they made 10,000 profit. Okay, so here only that net effect profit we have to take here. Okay, so by profit on sale of investment 10,000 directly, profit on sale of investment. Then next comes sale of furniture. So here they have only have given 3,200 and book value was 3,000. Okay, so regarding this we don't get anything in adjustments here. So because they have given furniture on January 1, 2017 was worth 12,000. January 1, 2017, that is opening balance is 12,000, out of which they have sold 3,000 worth furniture for 3,200. That means the difference amount 200 rupees profit they have made here. So profit take in income side. If they have made loss, payment side loss. Okay, so by profit on sale of furniture 200. If you want for your reference, you can write here 3,200 minus 3,000. Here also same, 90,000 minus 80,000 for your reference. Okay, next in receipt side no items are there, but one item should come here, that is given in the adjustment. Interest due on defense bond was rupees 7,000. So interest due means interest is generated but they have not received it yet. So accrued interest it is an income we have not received yet. Accrued interest on defense bond. Amount was 7,000. 7,000. Now, rent still owing rupees 1,000. Okay, so rent they are not paid up to 1,000 still. Okay, now come to payment side. Okay, so first rent here, on rent only adjustment is there. To rent rupees 6,000 less, add outstanding rent. Outstanding rent, how much? 1,000. So total 7,000 rent for the current year. Next, salary. Salary also there is an adjustment. So they have mentioned here salary paid for the year 2018 is 2,000. So that means this salary includes the salary of next year. So salary paid in advance. So that much we have to deduct here because that doesn't belongs to this year. To salary total 12,000 they have paid less salary of 2018 or salary paid in advance 2,000. That is total 10,000 salary for this year. Paid in advance. Okay, salary paid in advance. Next, postage to postage 300. Next, electricity charges 6,000. Okay, so in subscription there is one more adjustment given at the end here. Okay, what they have mentioned here? Subscription received in 2017 included rupees 400 from a life member. Life member means that amount should goes to capital fund. That doesn't come here. Okay, so means here still we have to deduct 400 from this amount. Okay, let us see for these things first. Electricity charges, $6,000. Then two books, furniture, they are going to balance sheet, defense fund balance sheet. Help to needy students. Help to students, that is expenses 22,000. So 22,000 they have spent for helping the student. So here one adjustment, instead making adjustment here, I will rub this. I will write it in the end. $90,000 less life membership fees 400. So 89,600. And here by profit on sale of investment 10,000. That is 90,000 minus 80,000. 90,000 minus 80,000. Okay. So such things we have to identify in the adjustment. If we fail, we will get wrong answer. Okay, so one by one I will read adjustments once again. Subscription for 2017 still owing were 7,000 taken. Interest due on defense bond 7,000 taken. Rent still owing 1,000 taken. The book value of investment difference taken, and 30,000 still in hand, that goes to balance sheet. Next, investment were still in subscription received in 400 life membership taken. Total furniture on 17 goes to balance sheet. Salary paid for the year 2018, that also we have taken. So no more adjustment here. Let us take the difference, whether we made a profit or loss. Okay, now 89,600 plus 200 plus 17,000. So 1,06,800. 1,06,800 is the total of income side. Now come to payment side. 17,000 here also plus 28,300. 45,300. So the difference is 61,500. 61,500. One item we missed in the receipt side, that is interest on investment, rupees 2,000. Interest on investment, rupees 2,000. Okay, now I think we'll get a correct total. So this will be now 1,08,800. 1,08,800 minus 45,300. So 63,500. Okay, so surplus on this is 2. Surplus or excess income over expenditure is 63,000. So total balance 1,08,800, and here also 1,08,800. Got it? Okay. So in balance sheet, first we'll go to liability side. Here first item, capital fund. Okay. So about capital fund, what they have given in the balance adjustment. So there here they have not mentioned anything about earlier capital. Okay. So let us in such cases we have to take the difference amount here. Okay. So whatever adjustment comes, that difference amount will be the opening balance of a capital fund. So I will keep it pending. So add life membership fees 400 rupees. There we have made adjustment, and add surplus. Surplus is 63,500, right? 63,500, and no donations or no entrance fees which are transferred to capital fund in this problem. Okay. Now come to asset side. So asset side one by one. So what they have mentioned here, book value of investments was sold was 80,000, and 30,000 of the investments are still in our hand. So take that 30,000 here. Investments rupees 30,000. 30,000 rupees investments. Then subscription received, that we'll take later. Total furniture on 1/7/2017 was 12,000. That we have to take here. Total furniture 12,000, out of which less sold out worth 3,000 rupees furniture we have sold. We have sold it for 3,200. But here we have to take only 3,000 rupees. And here also investments 80,000 worth we have sold and 30,000 still is in our hand. That means total investments in the beginning of the year is 1,10,000. Out of 1,10,000 we have sold of 80,000 worth investments. Okay, the difference amount 10,000 we have taken here. Okay, and here the difference amount 200 we have taken here. Okay, book value only we have to deduct in asset side. So that 12,000 minus 3,000, the balancing figure is 9,000. Understood that? That is the important part here. So they sold for 3,200, so 3,200. No. Okay. Next, what they have given? Interest due on defense. So income, we have not received it yet. Okay. Apart from that, any other assets here? One was furniture, another one was investments, and one more thing that is this year what they have purchased? Bonds, defense bonds are there. Okay. And purchase of furniture, I forgot this one. We have less, this is 9,000. Okay, add new or addition. So they have purchased new furniture of rupees 20,000. So total 29,000 furniture, and they have purchased books. So old books, so they have not mentioned anything about books in the balance sheet adjustments. So books they have purchased worth 3,000. 3,000 rupees books were there, and defense bonds 1,50,000. 1,50,000. Then next comes to cash in hand and cash at bank. Cash in hand, cash at bank, both 10,900 and 30,000. 10,900 and 30,000. Okay, what else will come from this? For book, furniture, books, defense bonds, and cash. Okay, now we'll go to adjustment. So one by one I will read once again. Subscription for 2017 still owing 7,000. We have taken here outstanding subscription. So we have to collect the subscription, yet we are not collected. So this is a asset. So I will write here outstanding subscriptions rupees 7,000. And in the adjustment, in receipt and payment account, they have mentioned for 2018 3,000. That is subscriptions received in advance. That comes liability side. Subscription received in advance 3,000. Okay. Now remaining one by one. Interest due on defense bonds was 7,000. So interest on bonds is due, but we have not received. That comes here. Outstanding or accrued interest. That is also 7,000. 7,000. Then rent still owing. Rent we have to pay. We are not paid yet. So outstanding rent. Outstanding rent, that is 1,000. Okay. Then okay, book value of this one 30,000 we have taken, and subscription received in 2017 400 goes to my life membership we have taken, and total furniture on January 12,000 we have taken. Salary paid for the year 2018 is 2,000. So that means you have paid salary in advance. So when we paid it in any expenses in advance, it becomes asset. So that will come here. Okay. I'll mention here, just you note it down. Salary paid in advance. How much you have paid in advance? I think we have deducted here. 2000. Okay. So now all adjustments are over. Shall we check the total now? So the difference amount should be taken here. 30,000 plus 29,000 plus 3,000 plus 1,50,000 plus 10,900 plus 30,000 plus 14,000 plus 3,000. So 2,69,900. Okay, one thing wrongly I have taken here, that is rent outstanding. Rent we are not paid, that doesn't come here. Okay, rent outstanding is outstanding rent 1,000. Okay, outstanding rent is 1,000. So I can write now here salary paid in advance 2,000. Okay. So now the total in asset side is 68,900. Okay. So liability side total is not matching because we don't know the opening capital fund. So take the total of these four items and deduct it from the total. So 400 plus 63,500 plus 3 plus 1 4,000. That is 67,900. So difference amount is 2,01,000. So the opening balance of a capital fund is 2,01,000. So total capital fund is 2,01,000 plus 400 plus 63,500 is equal to 2,64,900. So total both the side now 2,68,900. Okay.